Good morning. Steve Ray in Chicago with the morning grain comments. Well, yesterday was a shocker. USDA estimated total 8 crop acres for 2020, similar to last year, in which last year U.S. farmers had probably their worst spring to get things planted. Well, this year U.S. farmers have maybe had their best spring. I've never seen so many analysts use so many cuss words about the USDA numbers. USDA NAS said they didn't do anything different and that they put out just the numbers they had. I think most analysts feel that FSA crop insurance enrollment numbers might suggest by the end of October that they'll find 1 million bean acres more and maybe 2 to 3 million corn acres than what the USDA said yesterday. But still, you have to bring the crop numbers down for corn and beans, and you have to bring the carryouts down. Offsetting a little bit in the corn is that their higher June 1 stocks numbers suggest feed and residual for 19 and 20 is less, and that will probably carry into 2021. I also have never seen or heard or got so many emails and phone calls from brokers thanking whoever was responsible for yesterday's USDA numbers for putting some life into their trade volume. It should have been record volume yesterday, both on short covering by the funds and selling by the farmers. There were some elevators that did multiple times more amounts of cash sales from farmers yesterday, especially in corn, than they've done maybe in a year. And it's not quite over yet. I think this morning's weather run shows that for the next 2 weeks there'll be limited rain and heat across parts of South Dakota into Iowa and into Illinois. It's a little bit different than the maps of yesterday. So it will be hot and it will be humid and it will be dry for this 4th of July weekend. And like many 4th of July weekends, the market will test prices on Monday, depending upon if the ridge is still there or if it moves back into the west. If the ridge is still there, we could have just as much volatility on Monday as we had yesterday. Other news, we're still watching the rhetoric between U.S. and China and the impact it might have on the Phase 1 trade deal. But if I'm a buyer of grain, I'm a little bit concerned this morning that while the U.S. Summer weather pattern is not going to be a disaster, it could bring yields down a little bit from what we were trading before yesterday, and it could increase prices. And so we'll see if the end user wants to get some coverage. We are told in many of the crops, corn, beans, wheat, end users have good coverage at least maybe through the end of this year, but it just raises questions about 2021. The one thing that this does, if it continues to move higher, is that it will increase production in competing export countries. This was already the trend before the virus, and it probably will even escalate even more. So while we took one step forward from a price standpoint yesterday, we took maybe a step back from being competitive in the export market. So now we're watching weather. It's 100% of what we'll trade, especially on Monday. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day, and remember, changing tomorrow starts today.